Hello, everyone, and welcome to today's webinar on the hidden costs of fraud and dispute management, where to automate the process and reduce losses. My name is Julie Muhn, Senior Research Analyst with Finovate, and today I'm joined by Quavo's SVP, Revenue Executive Brittany Usher, and KeyBank's Head of Enterprise Fraud Services, Jen Martin. We're going to be discussing initial steps towards automation for issuing financial institutions seeking to overhaul their pre-existing manual and legacy systems. I will note that because of technical issues, Brittany was unable to have her face to camera today. Her computer decided to do a Windows update just before we went live, so that's always fun. I'm sure everyone's had a similar experience there. So we will only hear her voice today, but you can see her photo on the screen here. So Brittany and Jen, well, first of all, welcome. And let's start by having you both introduce yourselves. Brittany, you go first.
Sure, thanks, Julie. And just to note, I will be on camera. Jen is having technical difficulties, so we won't make it too confusing for the audience.
No, I've confused everyone. Okay, let's continue.
But thanks so much. Happy to be here. As Julie mentioned, I am the Senior Vice President and Head of Revenue for Quavo Fraud and Disputes. We are the world's only end-to-end, fully automated, cloud-based provider for fraud and disputes management for issuers. So excited to be on the call with Jen and really discuss this opportunity that we've had with her and KeyBank and just talk about this and more generalities to help others.
Perfect. All right, Jen.
Hi, I'm Jen Martin. I lead Enterprise Fraud Services for KeyBank. I apologize for my technical challenges this morning, but really excited to be here and be part of this conversation. As we're all experiencing increases in fraud across the industry, selecting the right tools and being prepared is of critical importance for me and leading my team. So happy to be part of this conversation.
Great. So I'd like to start the conversation by taking a look at where organizations can begin when creating their initiative to innovate in fraud and dispute management. Jen, let's start with you. What did this look like for you and the KeyBank team?
Yeah, I mean, this is a major change across an organization, right? And in some organizations, like for us, all of fraud and disputes resides within my team, Enterprise Fraud Services, but for many institutions, right, it can reside across teams in different organizations. And this is a critical system for your operation, right? So you want to go in kind of eyes wide open, really thinking about who's going to be your best partner long-term, go in with the mindset, this is going to be a long-standing relationship. So will those tools be able to help you today and then be compatible in the long run, right? This is a partner that can run with you at the pace of change, at the pace of incoming volume, across years into the future, and really be thoughtful about, how you view like where you are today and where you want to be, and selecting the right partner that's not going to only kind of maybe fix an issue today, but be that partner that's going to be with you long term.
Yeah, and so loss reduction obviously is a huge driver for starting a project. And so, Brittany, what are some other hidden costs financial institutions need to be considering in their current state when approaching a business case?
Yeah, so this is a great question. And, when we talk about hidden costs, when we discuss them, they seem so obvious. But really, it's more in line with those operational expenses that sort of Jen had alluded to. When we look at what resources are doing on a day-to-day basis, right? Are they engaged in meaningful work, or are they doing compulsory tasks that could be helped by leveraging automation and really get our talent back to focusing on core business objectives and what is going to be a revenue driver for the business, instead of really working on some of those low-level tasks. And then, larger than that, if we have those same resources engaged in this work that could be automated, we look at losing talent. I think right now it's really important to talk about talent in sort of the broader terms, right? When we see the Great Resignation, quiet quitting, all of these things that are impacting our organizations and really financial services as a whole. There's been some studies out that show that when we do lose talent, we're not just losing them as an institution, we're losing them as a financial services segment as a whole. They're not returning back to our industry. So I think we have an obligation as both partners and institutions to make sure that we have, the ability to attract, retain, and then train talent. And training's a big piece of this too. There's a lot of costs that come into, training and the churn of talent. So if we're able to make sure that we have, our resources engaged throughout the operational process when it comes to fraud and disputes. But I think in general, right, it's a larger conversation about what our talented individuals are really doing to help not only our employee experience, but the customer experience. Then it becomes a sort of full loop. If we have happy employees, we have happy customers. And there's a huge cost in what happens when you have, a negative impact to your customer experience, especially with fraud and disputes. It's already sort of a terrible experience when you have fraud in your account and you have to call your issuing bank and have that resolved. If we can make that a better experience through automation and technology and have, happy employees, then generally we're going to be able to impact customers in a positive way. And then that really goes into market share, right? So it is, again, not so much hidden, but it is sort of a roller coaster of where we can really sort of put barriers in place to reduce those losses. And Jen, I don't know if you have any, thoughts on that or sort of where you're seeing some of those things, hopefully, turn a corner and now with, the partnership.
Yeah, absolutely. And to lean into some of those points, you really, from my perspective, I want my team using the best of their talent in working our investigations and working through the process, and not focused on, as many of us experience with our legacy systems, manual workarounds and tasks and bolted on controls. That is a timely part of the process. And to Brittany's point, that impacts your ability to have, more straight through processing, have better experiences. I like to say that, fraud and especially disputes are a moment of truth between myself and my KeyBank clients. And I want to make sure that experience is as robust and thoughtful and client focused as possible, and having the right tools to affect those processes is really important. And we're seeing that in our initial releases with the Quavo QFD product. It is giving my team the ability to use the guided conversation to have consistent kind of conversation with the client about taking in the dispute, and then better automation throughout the process to make sure that we're kind of effectively working through the dispute, as quickly as we can, in a way that, is in the best experience for the client. So having that right tool, it is efficiency, it's experience. What we have seen and benefit as well is it's a common, what we appreciate about Quavo and QFD is that it comes with a common widget that is what our clients will use when we are ready to enable more digital experiences. We can present that to our clients to self-serve. It allows us to have a consistent process across channels, which I think is going to be really important into the future.
Yeah, definitely, certainly. I'd like to take a look now at the age-old quandary in FinDec, which is build versus buy. That's always a tough one. So how and when do you know it's best to buy technology and essentially outsource expertise? Brittany, let's start with you on this one.
Yeah, so, not sitting in Jen's shoes, but can definitely look at it from, how we engage with our clients. And I think that it is, as you mentioned, an age-old question. But I think that now it's even more important because it's not a matter of when we automate, it's how and, who we're going to be able to partner with to make that happen almost immediately or rapidly. I think that there's a lot of different options out there as far as, the customized build or customized application. But what tends to happen is that they are very costly, they're time consuming, they're resource consuming. You really can't get anything into production for, months, if not years. And then once you have it in production, it's pretty much a dinosaur. It's really hard to update and maintain, service and support, whether that be immediately or as the industry changes or as your organization changes. So I think the buy, conversation is really the now, driver of how we're partnering with our clients. When we look at the competition between, not competition, but there is that, the ability for fintechs versus traditional financial services to partner and leverage data and technology in a strategic way that allows them to make changes rapidly in their environment than, some of the more complex infrastructures within traditional financial services. And to be able to compete with those fintechs that are rapidly changing and adapting, you need strategic partners, and you need to be able to buy a product that Jen said, doesn't just work with your here and now strategy, but works with your long-term strategy. So to be able to invest in something that's going to help you scale and grow and achieve success throughout, years and decades of your organization that have low impact on your resources and your internal infrastructure, seems like a no-brainer to me, right? But I'm a partner, so I'm a little biased.
Yeah. Jen, do you have anything to add?
Yeah, I would say from, my perspective in making that decision, you want to look at the complexity of the process that you need to automate and you need to have tools around. And then do you have the SME resources to really build it from scratch, right? And that's incredibly time consuming, to Brittany's point. And we were in a situation where, we were looking to accelerate with the right partner that had the expertise, that had multiple people with the expertise, that had already built a product that incorporated, the regulatory compliance pieces plus the network, right? Disputes are very complicated and involve, obviously the card networks as well as your processor, your back office tools for a bank, their core systems, right? There's a lot of components that go into a disputes platform. And to have a partner that can bring a solution to you with a lot of the thoughtfulness already mapped out, with the subject matter expertise embedded, it's just a faster way to market and keeps my SME resources focused on the work at hand and not taking some considerable time out to go build a system from scratch.
Yeah, so on that, and we've kind of hinted toward this, but looking at the build side of things, Jen, as a bank, when do you know it's time to build something in-house versus outsourcing it?
Yeah, I think when you cross over into something that you really feel like you need to have specialized to your institution, that for whatever reason, what you do is so unique, or the experience or your internal systems are so unique that, a more standardized software as a solution would not, really could not support your business objectives. That's when you would start to look at a build situation. But I think if what you do is common across the industry and many people have to solve for these same challenges, the benefit of a platform, I think, is much more beneficial.
Yeah, and Brittany, looking at the same topic, how do you help clients demonstrate value as a product partner?
Yeah, so I'll dig into this, but I definitely want to piggyback on something that Jen said, because I think it's really important, when we talk about the uniqueness of an institution and, when to build versus buy. And I think that there is, a pretty vast misunderstanding about fraud and disputes management, that it is unique and it somehow, should be customized. And when we look at the success that we're having with our clients across really all of financial services, we've got clients in every single segment who are using our product. It becomes much more standard. The standard becomes more friendly to institutions, to account holders, to issuers, to merchants, to the association, right? Everyone's looking for less interpretation, less guesswork, and more sort of policy, process, and procedure that really creates a holistic experience that impacts your account holder. And when we look at, everything that's driven from the product side, it's driven from the, regulatory bodies, compliance, it's, association friendly. We're looking to ensure that we have all the chargeback rights. So we're reducing losses and really increasing wins for our issuers. But in the end of the day, it really is affecting the account holder and the customer experience. And when you make that standard, it becomes a much more important and impactful moment that matters, right, with the account holder, because now they know what to expect, sort of across the industry. And again, it affects the merchant and acquirer space too. When we look at the value that we're bringing to our partners or our clients when we partner, we do quite a bit, in the sales process to make sure that we're demonstrating value. As a SaaS partner and as a product organization, we actually looked at, hey, what are the barriers to getting clients onboarded to our product? What are we seeing as sort of the biggest reason to say, hey, we'll do this in a customized way versus looking at a product? And what we found is that it really was around sort of that heavy implementation cost. So, looking at this from a product that is very highly configurable, because we're talking about data, we want it to be a representation of your brand and account holder treatment, but we don't necessarily need to do heavy customization that make it impossible to update and stay current and relevant with changes. We want to make sure that we're removing that implementation cost, right? Because there really isn't anything that we're doing that hasn't been done before from a product perspective. We have direct integration with associations. We're going to your core system of record for, account holder data and things of that nature, along with many other integrations, interfaces, and endpoints. But that doesn't need to be a cost or a burden or an ROI. Right now, we're talking about true cost savings. We're reducing the implementation timeline. Right now, it's about 3 to 6 months to go live. With some of our larger enterprise institutions, sometimes that's around 6 to 9 months, but a huge turnaround, right, from the 1 to 5 years. And no implementation costs. So we're removing that, $500,000 to $10 million to get you live. And we're showing value almost immediately as soon as we're in production, because now we're demonstrating that across the organization. So we remove that sort of burden of entry, and we do a cost savings analysis. We dig into current state because we want to know, how is this impacting your business today? And how can we use that in production to show value with the data that we have? So looking at the automation, looking what's being removed from manual work to automated work, how does that impact your organization? And now how do we have a really meaningful conversation about the data that a client's collecting, like Key? They have a ton of internal experts that are looking at the data and looking at the product, and then leveraging that across what we're able to do because we have a product environment. And to even look at other clients and say, hey, here are comparisons, right? Here are what other people are doing and they're successful, and vice versa, to be able to create a client community. So, a lot of value in the arena of, a community now that is really driving innovation in an area that was sort of archaic. And Jen, I don't know if you have anything that you want to add to that, because I know you've done a ton of research and data on just sort of the short time we've been in production to show some of that value as well.
Yeah. I mean, that is a critical component, right? Our ability, one of our selection criteria, for bringing Quavo on was the fact that we could come to market faster than a full build, situation, and see those improvements. And we have seen improvements in chargeback recoveries and cycle times, just our process operating more effectively and efficiently because of the increased automations that we have today that we didn't have with our legacy systems.
Great. Yeah, so lots of value there for sure. I'd like to pause before we get to our next question because I forgot to mention to our audience that we will be we'll be doing a Q&A at the end of this session. So if you do have questions for Jen or Brittany, please enter them into the Q&A box or write them down, and you'll be able to enter them into the Q&A box, and we can address those in the last 10 or 15 minutes of the session. So do please note your questions there. All right, so moving on to our next question, I'd like you both to highlight some of the benefits that you've seen coming from organizations embracing strategic partnerships. Brittany, let's start with you.
Yeah, so I think we hinted at a lot of these things and touched on them as well, when it comes to what leveraging strategic partnerships afford traditional banking the ability to do in comparison to fintech, right? The ability to move much quicker into production, to get something live in, sort of a phase 1 or MVP much faster. And the ability to scale and grow with the organization really allows everyone to compete at the same pace, right? Now we've got, regardless of, your legacy in the marketplace, using strategic partners allows there to be that one-to-one as far as speed to market, and then also user adoption. I think it's really important to note that that's probably a scary place and sentiment when thinking about overhauling, an entire part of your operations, especially something that impacts multiple stakeholders, and how are we going to get people to really embrace this and use it? And it is, a really tried and tested implementation plan that we have that really allows for that testing and training to happen, throughout the process, and to really be a partner when it comes to user adoption, and then making sure that people really understand the automation and the process and what that means, in production and real life. And, larger than that, there is, the ability to have rapid changes throughout production. This isn't something that we put in place today, and everything you decided and who you are today is a representation of what's in the product. It can never change. This is a very fluid product and partnership. As an organization changes their strategic goals and initiatives, that's going to impact fraud and disputes management. And when you're looking at technology should really be something that sits on top of all those layers of infrastructure and can sort of move fluidly throughout the organization. Shouldn't be a blocker. If anything, it should create momentum for change. So I think it's important to really see that as a reason to embrace partnerships and technology from a buy perspective, because now you're able to look at core business objectives and not worry about, the tech component of this. You have partners that can easily adapt and change and configure to whatever that next sort of plan or strategy is, whether it's products, whether it's, the terrible conversions, right, that everyone sort of dreads. That's now okay, right? That's now something that we can embrace together as partners and work together to make those changes in the system, and really not put a blocker in place for your ability to want to change and how quickly you can change.
Yeah, no, Jen, again, we kind of highlighted this earlier in the discussion, but what benefits specifically have you seen from partnering with a SaaS fintech partner, specifically such as Quavo?
Yeah, I mean, I would say even from, initial conversations when you were even looking at the product and getting to know one another, right? What I noticed and what I knew that I needed for my organization is to bring in a partner that had exceptional depth of knowledge and experience in this space, right? And, you want to bring in a partnership that you already knows the product, right? What's frustrating is to bring in a partner and then you do spend like the next, years explaining the industry to them. I think that was not something that we wanted to go down that type of path. And so, we were looking for that provider that had extensive depth of expertise, had a well thought out platform that we could use and extend over the years. And what we really appreciated is really the whole process. Like, the methodology has been great. The way that they deploy the application, the kind of agile framework that they use, so that we're seeing iterative releases along the way that we're able to test and see how the system is coming together. Our teams have worked together in concert, meeting daily for over a year now while we've been in the implementation phases, and really that cross collaboration of just thought leadership, how we're going to use the product. They're a strategic partner for us at this point, right? We're always talking through, okay, how do we continue to leverage the platform to improve processes, experience? Where do we want to go next? And it's a big change to an organization, and you want to make sure you have the right partnership and platform in the experience. And we really feel like that's what we've had with Quavo. It is as much the application as the company and the expertise and the process to which you do the implementation.
Yeah. Yeah. Now, Brittany, looking kind of at the flip side of this, how has partnering with KeyBank benefited Quavo's products and organization?
Oh, so much. We don't take the sentiment of client community lightly. It truly is a huge factor of our product roadmap. So, I love, all of Jen's kind words and our expertise. And this is all we do. We only do fraud and disputes. We've got hundreds of years of experience, and we have expertise across the organization. But it doesn't mean that everything that we're seeing and doing is, the only way it can be done. We take a lot of feedback from our clients. We understand that this is highly configurable, but it's also very personal, right? It does impact account holders, and there needs to be your brand and your account holder treatment and loyalty and all of those things that are within that entire end-to-end process. And we don't take that lightly. We have our product roadmap and we look at industry changes, but I would say at this point, 60 to 70% of our product roadmaps driven from product enhancements that are coming from our clients. Working with KeyBank has given us so much insight and enhancement, stories and product, roadmap initiatives because of that really close partnership that Jen had said. We are really dedicated to understanding their business and their account holder treatment, what they're looking at from compliance and regulatory standpoints, and taking that back to our, product team, reviewing all of that and looking at, is this the best improvement or enhancement to the entire product and to the entire client community. So I think it is really cool to look at that roadmap and see, from a client perspective, like, hey, these are the things that we suggested, and now they're in the product, and now we've got all of these organizations across financial services that are sort of taking part in our journey. So it is really a collective force of all of our clients, and we will never lose that piece.
Very cool. Yeah. So I'd like to kind of shift gears now and look at regulation, which can kind of be a little bit of a sticky topic to talk about and to hear about even. But how can partnerships be helpful from a regulatory perspective? Jen, I'd like to start with you. In your experience at KeyBank, how do regulatory and compliance considerations weigh into the decision to explore a SaaS partnership instead of building in-house?
Yeah, the regs are very clear on what they require, and we were looking for a partner that understood the regs, that were committed to staying current with the regs. There's new guidance that comes out on a regular basis. There is changes in the network requirements, right? It's not just, government regulatory requirements, but there's requirements all throughout the process as well, right? That you want to make sure that you're not in that alone, right? We have a peer of institutions and fintechs that use the Quavo platform, and Quavo is committed, to making sure that the platform stays compliant with the changing regs, with the different requirements. And so we're not out on an island on that, figuring this out and doing it and building it on our own. We're in a consortium of clients on a platform that supports those changes and supports them timely. A lot of the times you don't have a tremendous amount of time to make the updates, right? And so, in our partnership, we know that we'll, be able to be compliant when we need to be, and especially if those timelines are short.
Yeah, that makes sense. So Brittany, over to you. What are your clients seeing across your products in regard to regulatory and compliance issues being resolved once in production?
So we, have a deep expertise in this space. I was on a panel back in Finovate spring, and there was a comment made that there's a lot of fintechs that are emerging in this space, and that compliance is an afterthought. And I was like, oh, I've never wanted to be, disassociated from fintechs more in my entire life when that comment was made, because it is so important and so critical to what we do. And this whole process is embedded with regulatory and association compliance mandates and changes, and we need to take that very seriously. So that is, it's present and it's apparent throughout the entire end-to-end process with Quavo's flagship product QFD, but also our other product, Aria, which is an AI companion product. And what we've been able to do from a sort of regulatory and compliance perspective is show consistent, reliable data and decisioning across the entire process. So really that allows the compliance team and auditors and regulators to see who's making decisions. Is it the system? Is it a human? Why is that decision being made? The data that's available that guided them to that decision. And then, was there proper communication and correspondence with the account holder? Did it meet regulatory timeframes? All of those things. So, there's awareness and transparency, but there's also really a mechanism within our automated workflow to ensure that all of our clients are compliant. The product won't actually allow you to break out of those regulatory compliant timeframes and workflows, and it does create urgency within the system. So what we've seen is within 90 days of going into production, we've actually been able to remove or resolve all compliance or regulatory issues that were present in the environment prior to our partnership. And that's really important for a variety of reasons. But it is one of the reasons why people come to us to partner, right? They're already in a position where they're unfortunately meeting with auditors. There may be some compliance issues or regulatory fees or fines that are already out there, and we're able to remediate them almost immediately. So, what a burden that's lifted off of the organization, and to be able to appease those same auditors by giving them, sort of that read-only access and transparency into the system.
Yeah, great. So it's obvious by looking at the fintech news, you always see anything as a service. We've definitely entered the anything and everything as a service era in fintech. What do you see as the benefits of tapping expertise outside your own organization? Jen, let's start with you on this one.
Yeah, again, you get a cross, a cross industry perspective, right? I mean, I know my processes, how we operate within KeyBank, but when you bring in a partner, you do get that breadth of experience. You get the experience of the talent within Quavo that has worked for a variety of different institutions, has been in the space for years. So you bring in their perspective, not only from a subject matter expertise to the product, but also technical expertise. You're able to tap into resources that you may not otherwise have within your own organization.
Great, yeah. And Brittany, anything to add?
Yeah, it's funny. We call ourselves disputes as a service, right? We are a SaaS partner, and it's what we do. Our marketing team and our head of marketing, especially, has worked tirelessly to help us really sort of coin that phrase and create, awareness and brand awareness to what we do as a service, because we are one of a kind. Beyond that, as Jen had mentioned earlier, the as a service piece is so much more than technology. It is a partner who's there to service and support. And, what I think about, when you're sort of talking about as a service, you're talking about as an extension of your organization, right? This is more than just a product. It's more than just, a BPO partner or, a services partner. This is a really important, critical part of your business. It's not easy to uproot partners once they're in there. It's much easier to work with the as a service model because it is able to, change and adapt and all of those things that we've talked about. But that service component, right, that expertise component allows you to have an extension of experts within your organization that you can pull from. And a lot of that is going to be about trust, right? So finding a partner that you can trust, that you trust in their expertise, allows you to now tap into a plethora of information and expertise that you wouldn't necessarily have within your organization. But, in order to do so, you definitely have to be willing to do some of the legwork to find the right partner.
Yeah, it's all about that, filling that talent gap. That's always useful there. So let's talk a little bit about challenges. What are some of the challenges in outsourcing to a strategic partner? So Jen, what challenges have you faced in your career? Do you find that people are open to embracing partnerships?
Yes. I mean, given the right situations and scenarios, absolutely. I think we all know with the pace of change in our industry, to not have partnerships, to not be able to lean in to those relationships, to accelerate or improve something that you're focused on as a business objective is really short-sighted. We're kind of longer the days that we can keep up with this rate of change in our industry by going solo. So I think, we're, definitely appreciating that in the partnership. And I think in terms of challenges, I think there's always that, kind of initial, the teams getting to know each other, the different processes, right? So, at KeyBank, just working with a partner in an agile rollout structure, how the teams work, for us it was, working with the JIRA system and different techniques and methodologies than we'd had on a project of this size with a partner in the past. And adapting, to those new techniques. And now it's like second nature to us, right? We've been, working together, through the project. But I would say that, and really Quavo and our partnership, managed that really well. They really kind of taught us early on in the process, like, hey, this is how, we support our platform. This is how we need to engage with you. These are the kinds of questions that we're going to need answers from you and information that we're going to need from you to be successful. And really the transparency in how the product is delivered is really important, because if you stumble in that process, you will not implement as quickly as you might expect. So I think from financial institutions who might be a little bit more set in their ways and how they bring product to market, being open, like you are now bringing this partnership in for real reason. And you're doing that to, bring a product to market in a more agile way, to get something, out there for your clients faster. You have to be willing to adapt to those new methodologies, to really leverage the service. So I think it's an adaptation for many of us who may not have had this kind of implementation before.
Yeah. Definitely. So Brittany, over to you. Do you have any recommendations to help overcome these challenges, or any others that you've seen in working with your clients?
Yeah. And, a lot of them piggyback on exactly what Jen had said. It's really important to have those conversations really early on when, vetting partners or looking at an initiative. is, are we ready to make this change? This isn't in a silo project. This impacts multiple stakeholders. Not every project will, or not every partnership will, but what we do in the fraud and dispute space most definitely does. And that means that we need to have everybody at the table, and everybody needs to be present, and they need to be part of the journey. We see a lot, and in my, previous life, everyone gets so excited because there's, a new partnership opportunity, or this prospect is really excited and wants to talk about, a deal. And we forget that we have a responsibility to ensure a successful partnership and a successful, go live and production. And that starts with having honest conversations really early on in the project. We know who needs to be involved in the project, so let's get them at the table. Let's get them involved. We know what stalls a project or what makes it unsuccessful, and it's not having those key people feel like they were a part of the process and giving their feedback. And as Jenna had mentioned, what's the methodology? Is this radically different than what we're doing today? And as an institution, are we okay with that, right? Can we adapt to this model? Or is it so foreign that it doesn't allow for a good partnership to really, come to fruition? And I think both parties need to be aware of that and really have that honest conversation with themselves. We've definitely walked away from partners who we felt like weren't ready to take an automated initiative, right? They weren't ready to let us help as the experts drive this and be part of that journey with them. And, they really wanted to focus on sort of the more manual aspects. And it's just not what we do. So I think it's helpful to have that conversation and really align with not just the value props, but the whole methodology and the process, right? We have a very agile process in how we go through our onboarding. And if that doesn't align with a client or a partner, then it's eventually going to cause some friction. So, I think that that's the biggest recommendation is, you can never have too many project champions, and you can never have too many honest conversations.
Yeah. Great. So I'd like to end, we have time for about one more question. I'd like to end on this one here. And again, take a break to our audience. If you have questions, feel free to submit them now. You also have time at the end, but we have about 15 minutes left. So if you have burning questions, be sure to input those. All right, so on to our last question. If a financial institution is ready to begin looking for partnerships, can you offer up some specific examples to what that process looks like? Jen, let's start with you.
Yeah, I think, talking internally, like really within your own teams, identify what is your strategy? What are you trying to achieve in an outcome? Where are you today, and where do you want to be in the future? And how do you want to get there? What is your timeline? What objectives do you want to meet through the effort? I think it's really important to be clear internally on what you need to solve for and why you're changing platforms, why you're thinking about bringing in a partner or potentially still thinking about a buy or build decision. Really vetting that out internally, understanding budgetary constraints and resource constraints. And to Brittany's point, are you really ready to take this on right now, given the magnitude of this type of implementation, and really being solid in what you aim to achieve before you start the process, because then those conversations go much more effectively when you do start to talk to partners, and you can be much clearer in hey, these are the things that we're really trying to solve for, and how can you help us get to those ends, and what kind of operating metrics and things will we measure ourselves against to make sure that we're meeting the stated objectives that we went into to solve for. But I think it's especially for an institution that's probably complex in a matrix organization, really going in with a clear mindset of what you aim to achieve through the exercise.
Great. And Brittany, are there any resources that Quavo provides to help assist with this research and discovery process?
Yeah, we have an entire knowledge center on our website where we have our experts dedicate, their time and their expertise to, different topics that impact the industry and impact our specific niche. And that really comes down to, some of the costs that are present, in their current environment, how they work with a partner, are there best practices, sort of tips and tricks to make you successful? Because we do see this as sort of a neglected segment of the organization or of the, financial landscape. There's a lot of information for the merchant side of the house. Issuers definitely are left to interpret a lot. And as a partner, and just as someone who serves the community, we want to be able to provide those resources and, sort of some of those initial cost saving journeys and the things that we do throughout the sales process definitely help aid that. But I think even when you're doing initial research, really understanding the entire project, the partner, the product, the components, as Jen had said, it's important to really know what it is you want long-term and looking for a partner that checks off all those boxes now and into the future so that you don't have, a single point solution that you've got to stack a million other sort of interfaces and endpoints to, but something that can really be a instrumental part of growth within that particular, project or initiative.
Yeah. All right. Well, that brings us to the Q&A portion here. We have about 10 minutes left in our call. This first question is for Brittany. Does Quavo handle all dispute types such as ACH, Zelle, and cards?
We do. So it is a single platform that handles all transaction types. So that's going to be credit and debit cards, and then all deposit transactions, including P2P, RTP, Zelle, and BNPL, all of the fun acronyms that are out there and all the changes that are coming into the industry. If you can select it in your transactional history, either as an agent or in self-service, it's going to flow through the QFD platform.
Great, yeah. All right, this next question, Brittany and Jen, you guys can decide which one will take it, but it says, in your experience, what is the average dispute handling costs, accounting for all operational costs and write-offs and unrecovered losses before and after implementing a partner solution?
So that's really
Jen, I know you guys.
I'm not prepared to send out those numbers, in this conversation, but I would say that that number, honestly, is going to really change, is different for every institution, right? It depends on your breadth of products. It depends on, are you all consolidated into one unit managing disputes and fraud? Are you separated? How you separate call center from back office, how you use digital, right? All of those things come together into that cost. So even if I could provide a cost, it's so subjective to anyone in your own individual organizations. I don't know that it's that meaningful, but I would say that we are seeing, outcomes that we are expecting. We're seeing efficiency in our end-to-end processing. We are seeing improvements in recovery and chargeback, first-time chargeback wins and approvals. We're seeing improvements in the flow of how the dispute is taken, the accuracy in getting the dispute right the first time and not having to have repeated conversations with clients because the intake wasn't clear, right? Because the guided conversation does a really great job of fleshing out all the information that we need to complete the dispute. So we're absolutely seeing the outcomes that we anticipated going into the project, and those specific numbers will vary by institution.
Yeah, makes sense. All right. This next question, Jen.
I was going to say, I can jump in there a little bit too. When we do this exercise with cost savings, we're definitely looking at that current state. And as Jen had mentioned, it is wildly different from institution to institution. I think on average, we see that it's somewhere between $35 to $50 for sort of a current state cost per dispute when looking at, sort of general operating expense and resources. And that does come from, the back office investigation, frontline agents, branches, any way you're interacting with your clients, to, what are those write-off losses? What are you doing for chargeback recovery? What we like to do is, take all of that into perspective to give you sort of that current state, so you understand, are we operating at over $100, right, to process a dispute, and is that impacting our losses in a way that, we can really sort of stop the bleeding? When we look to engage with a partner, we would, our goal is to drive that to, anywhere between 50% and 80% automation and efficiency gain. So reducing those losses, offsetting a lot of the manual work today to automation, and really creating a one call or one interaction resolution for the client, but then also, or for the account holder, but then also really to make sure we have that straight through processing and we can remove the manual intervention. So we're able to do that in a variety of ways through, our flagship product and ARIA, but generally that's where, we aim to be. So regardless of that initial cost, we would like to see that, come down at least, 50% plus with automation and efficiency.
Yeah, that makes sense. All right, this next question is for Jen, and obviously, Brittany, feel free to chime in as well. It's not always easy to assess a large project like fraud and dispute management and determine where to start or where to focus on efficiency and automation. Where was your initial focus?
I would say it was tied together, right? We wanted additional automation so that we could drive out efficiency. Our current platform really just it did not have a lot of automated controls and capabilities that made data seamlessly flow through the system. And so we knew that our future state system, we wanted to have, automated controls, like help us do things timely, help us get to the next step, don't require human intervention at every step of the process. And manual controls stacked on top of each other. So we knew that if we focused on, a better straight through processing automation flow, that the efficiency would follow. And that through that efficiency, that ultimate client experience would also be, improved and really the experience that we want to give our clients.
Yeah. Any thoughts to add, Brittany?
Yeah, I think that there is a, always that initial project sort of roadmap, right? It's here's all the things that we want. And then when we sort of break them down, some of these are nice to haves versus need to haves. And I think it's important when working with a partner to look at this as a phased approach and as a project that will continue to probably span, in phases. And that is for the benefit of both parties, right? We definitely don't want to boil the ocean when we partner. We want to make sure that we are adding in efficiency and automation gains early in a phase one, but then continuing to add in additional products and volume to ensure that, we have user adoption top of mind and closely behind that client or customer experience to ensure both are, being positively impacted by the rollout of a new project. And then, continuing those phases to add in additional automation and features like self-service and additional sort of automated intelligence for decisioning is going to be really important. I think it sounds really exciting at first to say, hey, let's automate everything and let's move everything to automated decisioning. But that doesn't always sit well with your compliance team. So I think it's important to have a conversation internally, like Jen said, figure out what it is that you want, and then use a partner to help sort of guide you and make recommendations for projects and best practices that make sure all of those things come together, but they're not disrupting the organization.
Yeah, and to tag on, that is an iterative process. Like we are we're we are not automating end to end, today. We're definitely still have our investigations process in the flow. But what we have been able to do is really improve that data transparency, through the entirety of the process. And then, just kind of, Brittany reminded me, when the system is thoughtfully designed, the implementation and the change management aspects becomes so much easier for me and my organization. So it is like a half-day training tops to train the intake process, because it is structured in a way that it is very thoughtful. It guides the conversation. And so as long as you follow the flow and help the client through it, there's not a lot of upfront training time required, because the system's so intuitive and helps and has suggestions and guide points along the way to help the end user, that really does help that adoption and then the training. And then obviously there's turnover and attrition in operating teams as we onboard new teammates. It makes it a much easier process to onboard new teammates into the application as well.
Yeah, great. All right, well, that is all we have time for. That hour just kind of flew right by, I admit. Thank you so much to our audience for tuning in. This has been Jen Martin, Head of Enterprise Fraud Services at KeyBank, and Brittany Usher, Senior Vice President of Revenue at Quavo. Thank you so much, everyone.
Thank you.
Thank you so much.